Hi, my name is Mark Walker. I'm the editorial director at the FinTech Times, and I'm very fortunate to be joined today by a woman who made history with the first Agentic AI payment. Perhaps you could give us a little introduction of yourself.
Sure. First of all, Mark, thanks for having me. And I could clearly see the kind of engagement that our launch generated. By way of introduction, my name is Prakriti. I'm responsible for all core products for Mastercard for the Eastern Europe, Middle East, and Africa region. That's about 80 markets. Me and my team cover everyday payments, consumer payments, as well as online and acceptance solutions, and the latest hot topic, which is agentic commerce.
Fantastic, yeah. So, I think, our post went exceptionally well. So thank you very much for joining me to go through some of the questions that we got from that. I think in total we had about 140 people pose a question, ranging from clapping and applauding to where's the agent? Where's the agent? And I think probably the first thing that I wanted to address is that actually what we were not demonstrating was an agent. We were actually demonstrating was actually a new protocol, wasn't it? Not an actual agent solution.
Look, let me break this down a little bit, right? There is certainly an agent involved, and we may feel that this will look very different from what things look like today, but it actually does not. But before we go into what is the protocol, let's just unpack what is the agent, right? Today, we are as consumers engaging with third party agents, and we go to these agents and we ask questions, we ask, for recommendations, we do search, we do compare through third party AI agents that are, of course, available through large LLMs globally, not to name any in particular. We also know that historically always a lot of our partners, banks, whether it's banks, airlines, merchants, have exposed some or the other form of interaction platform to us which feel intuitive and is over chat, right? Those platforms have taken the form of really less intelligent chatbots to sometimes more intelligent chat agents that can do a few tasks for us. With the advent of LLM, we believe that there will be a number of entities, whether it's third party large language models that we today interact with, or it is agents that may be created by banks, by airlines, by retailers, that will all work with one goal, which is to simplify the consumer shopping and commerce journey. So what we did, for example, with Majid Al Futtaim is actually an agent that sits. This is the agent of the merchant. It's the agent of MAF. And when I shared the broader video, it shows you that as a consumer, you can go into either WhatsApp or a web hosted agent and do your entire journey of searching, comparing, and purchasing a movie ticket from an agent, as opposed to, for example, if I'm thinking about booking a movie, I will try to now look for where is it playing, what time is it playing. I will go to another platform and try to search for the IMDb ratings. I will also try and see if I'm going with my kids, is it appropriate for children? Then what are the show times? Okay, these are the show times, and I'll go to the website of the let's say MAF in this case, or the cinema, and I will book the ticket there. This experience brings everything together. Your search, compare, capture the intent, purchase, without the need for leaving the agent who is doing all of this on your behalf. Now, there are two types of agents which we will see in the future. There is a agent that will assist consumers in commerce, and then there is a type of agent that may do commerce autonomously. What we demonstrated is agent assisted commerce, which means that the consumer, which is me, or you, we are still engaging with the agent and giving the agent the instructions in real time as we do the purchase. An autonomous agent is, this idea where an agent may make purchases on your behalf when you're sleeping, right? For example, me telling my agent, try and book me this airline ticket the moment its price falls to, let's say, X dollars, right? This is a future where we want to get to with fully autonomous agents that may make a purchase while the consumer is sleeping or doing completely something else. What we have today is agent assisted commerce, where an agent basically simplifies that search, compare, intent, and purchase journey all happening in one place, in one platform, without leaving the agent and going to the merchant website. Why this is important is because we do believe that shopping is not a standalone experience. Before shopping and after shopping, there's a lot that happens. We search, we try to find out what is the best for us, we look for recommendations, we may talk to friends. Today, instead of talking to friends, I might get a better recommendation because an agent will consolidate an IMDb and a Rotten Tomatoes and give all of this to me in one place, right? So it's really bringing that commerce journey through assisted AI agent and simplifying that journey for the consumer. So we did have an agent and we did have the protocol that works behind the agent and actually shops on your behalf with the merchant, who is a different entity from the agent itself who's assisting me in making that purchase, if that makes sense.
I think that makes perfect sense. I think that sums it up quite well, actually. I think one of the issues is that whenever everyone's talking about agents and agents doing this and doing that, we all have that 5-year future effect of thinking where the agent's just operating completely autonomously. And I think what a lot of people reacted to is, well, that looks normal. It just looks normal. Well, yeah, that is actually the point, because actually what we were doing was showcasing a current use case and it being used actually live in the flesh rather than speculating on what might happen in the future. And that's kind of, I think, demonstrated quite nicely in the way that you sort of talked about that. I guess the other thing that most people were really interested in, and this is where probably more of the fintech nerds got involved in the conversation, was around the risk, liability and sort of fraud side of things. And you kind of touched on it a little bit earlier. One person was kind of like very adamant as well. What happens if the AI agent makes a mistake? Now, obviously, in this scenario, in this demo with our agent assisted purchase, that's not really going to happen, is it? Because you're still giving real time approval and acceptance of it.
Yeah. So this is and I think this is really the question to ask, is what ensures that the payment details, the payment credentials are safe, secure, and they are used for the intention for which the cardholders actually ask the agent to do so, right? And it's very much true that the agent pay framework is built for that future where the agent works autonomously. We have to, what's the role here that we're playing as Mastercard is to build a payment protocol that allows itself for a third-party agent to shop on the behalf of consumer, whether the consumer is doing that in real time, assisted by the agent, or while I'm sleeping and the agent is doing the shopping on my behalf. So let's just break down what is needed in order to secure the payment details. Number one, I need to make sure that my card and my payment credentials are used for the purpose for which I authorize the agent to use it and for nothing else. Number two, the ecosystem partners, for example, my bank that actually gave me that card, and the merchant who's actually going to give me the service, in this case, the Majid Al Futtaim, have some way of recognizing that I have authorized a third-party agent to make this purchase on my behalf, and to make this purchase only and nothing else, right? So and that my issuer especially, right, the bank that's given me the card knows that I am the one who used it, and this is since it's an agent that's doing the transaction, there should be a way for the issuer to know that it's me who's used it, so that if there is any misuse, the issuer has a way to verify my identity. So the three things that hence are principally important in this protocol is, number one, the authentication of me as the person who's making this transaction, that authentication data actually going to the issuer. Second is sending data associated with what that transaction was intended to be for, i.e. the intent, it was, I wanted to buy a movie ticket and this movie ticket costed, 40 dirhams. And this was the purpose for which I instructed the agent to make the transaction on my behalf. So that's data transmission. And the third part is visibility to both the bank and the merchant. And that is what is made possible through the upgraded token that I spoke about, which is the Agent Pay token. Agent Pay token essentially rides on Mastercard Digital Enablement Service, or MDES. Today, when we as consumers use our cards online, as well as for wallets like Apple Pay or Samsung Pay, the transaction rides on our security technology, which is MDES, the Mastercard Digital Enablement Service. And MDES allows us to replace a real card number with a secure digital token. And that secure digital token is created for a specific purpose and on a specific device. This is the reason why issuers will trust MDES token. Usually, when we create an MDES token, we will create it with the approval of the issuer. So, for example, if I am creating a token for a wallet payment, I will always authenticate before I create it with the issuer. So in the process, when we did the transaction, one of the things that we showed is that when I am booking the movie ticket, I am, as a consumer, clicking on a button or making a comment saying, I confirm that I am booking 2 tickets for 40 dirhams for XYZ movie with this merchant. These data fields that identify what was the intent of the transaction is passed in the data across to the issuer and to the merchant. So the merchant knows what is the purpose for which the agent made the transaction. Secondly, I also authenticated using my facial biometrics. And I used what we call passkeys, which is essentially my biometric data, which is saved uniquely on my device. And I use the passkey to authenticate, which allows the issuer to know that I, as in Prakriti, authorized this agent to actually make the transaction on my behalf, right? And those data sets are then bound with the MDES token, which is the secure digital token, which is passed through our network, and it goes to both the issuer and the merchant. Now, when the issuer and the merchant want to decipher, and in the case of a fraud happening, they will then know that as a cardholder, I have actually authorized the agent. I have authorized it for this purpose and this purpose only, and I actually authenticated. And when I create that biometric passkey, it actually sends a ping to the issuer and tells them that it is Prakriti who's trying to create a token. So this allows the ecosystem to operate with safety and security and transparency. One piece which is also new is we will be registering any agents with Mastercard through a Know Your Agent process. So the Know Your Agent process is essentially a new standard and a consistent set of guidelines which will register the agent, create an agent ID so that we can share that agent ID with both the issuer and the merchant, and they know who is the agent that has actually made the purchase. So what does this do? This brings transparency. This brings visibility of the intent of the transaction, and allows an issuer and a merchant to act in case of a fraud, because they will have the agent ID. The issuers have the choice to not approve transactions that don't come with an agent ID then, right? So it creates the framework for the ecosystem to operate with safety and security.
That's you stole my question, because that was the one that I was going to go for, which was actually, does the issuer and the merchant know an agent's being used? Obviously, the merchant does, because you're within their agent and you're using it, but the issuer therefore also gets that. And as you quite
Yes.
rightly said there, in theory, if an issuer decided they wanted to stop their users using an agent in any way, shape, or form, they can turn that functionality off
Yes.
and decline effectively every request that they get from an agent-enabled token.
Yeah, exactly. Or the other way around, where they feel comfortable with the with what one of the things that we've done this with MDES, we've done this with tokenization. We've registered where we registered digital wallets, right? So today, for example, if a transaction reaches the issuer from an Apple Pay or a Samsung Pay or a Google Pay, they honor it because we have actually taken all of these wallets through the journey of registration. And it's kind of the same. One needs to think about it as a journey in that same direction. If commerce is going to move to agents, the whole ecosystem will need to find a way to trust these agents, and this is the trust framework. One more clarification that I do want to give you on your question is, you said in this case the merchant, it's the merchant's agent. So in this case, true, it is the MAF agent, but we will have many examples where it may not be the merchant's agent, right? It may be a completely third party consumer's agent that's actually trying to shop at a merchant using open protocols that are currently available now in the industry, the MCP protocols of different kinds, right? Every single large language model agent is releasing their commerce protocols, and merchants to different degrees will expose their services in those agentic environments. And this is also a way for the merchant to know actually which agent is trying to shop at my website, and to make the decision how to expose and how to treat those agents with the right data sets.
Yeah, so they may also take a risk-based view on what agents they will accept, in that they may say, yep, if it comes from, ChatGPT, we'll say yes, but if it comes from another, we might say no, and they can then actually have that flexibility.
It may not be that simple, right? Because in this case, actually, it will depend on the merchants, really. There are different protocols with the merchants will decide their entry point, right? Some merchants may decide to expose all of their APIs and their data sets and their inventory to a third party LLM, and those protocols are being set by LLMs broadly. Some merchants may decide to have their own agents. Some merchants may allow agents to simply screen scrape from their websites. That decision will lie with the merchant. If the merchants do decide to work with LLMs, in that situation, this protocol allows them to then see which transaction and which request is coming from which agent. On the other hand, agents are registered with us. If they decide not to actually engage with an agent at all and block agents, that's outside of this framework, right? So let's say the merchants who don't want to work or don't want to enable commerce in agentic ecosystems, for them it's if they take the decision to just block AI agents altogether, they may not come up in the search results, or they may come up in the search results, but the consumer may not have a way to actually get directed to their shopping carts. So I would say that those kinds of merchants who will take a very high risk-based approach may actually sit outside of this ecosystem. I think we're also seeing merchants at this point in time evaluating their strategies, how they want to move, how fast they want to move. Do they want to fully embed themselves into LLMs? Do they want to have their own agents? I think there's going to be a lot that will change in that side of the ecosystem. But as I said, for a merchant that does decide to engage actively with an LLM, this then creates the ability to identify which LLM is trying to shop with them.
Merchants are obviously going to make their decisions as they go as well as to how they're going to do it. Another question which came up was about, in some instances when someone does pay for a service and the service is not delivered, there is a chargeback option and a way that an issuer can then issue credit, etc. Given that this is using existing rails, is that the same process, or is this slightly different in this new agentic era?
Look, so let's talk about disputes and chargebacks, right? So disputes and chargebacks in agentic world will rely on the intent data that has been captured, right? Which basically records the consumer's instruction and requires explicit approval before the payment has been processed. And as we showed in the journey, we had a confirm booking as an explicit button there, and it was a design choice. And it was a design choice because when that button is clicked, there's a set of data fields that are passed in the transaction information that actually capture, as I said, what is being bought. So that is fundamental to maintain dispute and chargebacks in the agentic world. What intent capture then does is, clearly presents to the consumer at the time of checkout the option to not proceed or the option to confirm. Then I go into my payment page and I authorize my card to be debited. Then the 40 AED that I gave in my intent and the 40 AED that came in my order should match. If they don't match, this should create a score, a high risk score at the issuer's end. And then the issuer can actually decline the transaction and thereby support consumer protection. That solves for that those use cases where I've actually told the agent to do something, but my card is being charged for something else. And hence that control and matching of what was the amount in the intent and what is the amount in the authorization is important. The responsibility framework that exists today for card payments, which is issuers, cardholders will raise disputes with the issuers will look at the data and then charge back to the merchant should the necessary checks go right. All of that is then possible because the issuer has data to rely on, either to go back to the consumer and present the data to say the intent was captured. It was a 40 dirham transaction intended. It is a 40 dirham authorization. Or on the other hand, it was a 40 dirham intent, and you've been charged for 1,000 dirhams, and hence actually the transaction becomes disputable. So I think it's important to then share those details, and also for the agentic commerce providers to share accountability, right? And in the future, today, this is the setup, right? But it also allows us to introduce new dispute categories, which we will be looking into, right? Delayed purchases or delay purchases, so that the use case can evolve. I think over a period of time, the dispute framework for agentic commerce will evolve. The baseline of the data is what we're trying to set up so that there is the right transparency on intent, on transaction amount, on purchase intent, that allows the issuer, merchant, the agent, and the consumer to trust each other. And in the case or event of fraud, to take the data and match it one against the other and say who's really responsible in the ecosystem for this fraudulent activity as such.
Yeah, and I guess it's just another scenario, isn't it? Because there's already a difference if you use, say, a debit card or a credit card in certain situations, and obviously when you use a wallet also as well, isn't it? So are we creating a fourth scenario with this, or are we borrowing from one of the other three?
It is riding on the dispute and chargeback framework that exists today for debit and credit cards. It is very much riding on it. We have to recognize that the dispute and chargeback rules change based on how the authentication has been presented to the cardholder, right? We all are living in a world where, as consumers, we want as less friction as possible, and yet friction is what brings security. So, for example, if you have been authenticated by your issuer, either using biometrics or using a 3DS or by being directed to their banking app, this is where the highest level of security will be, because your credentials cannot be used by somebody else who does not have the same biometrics or who does not have the same access to your banking app, or OTP is actually the worst kind of security method, as we know now, because of phishing. In the case of an agentic transaction, we have to see really how merchants and agents want to evolve that experience. What we showed and what we demonstrated actually included a fully authenticated transaction. If you captured it, we had a pass key that was used to authenticate. That pass key actually is an authentication method that calls on the issuer directly, and it uses a biometric registration that was done with the bank. So it's a fully secure transaction. It has full protection from a liability, chargeback, dispute standpoint, as it is. There, we do anticipate that there will be other types of experiences where an agent or a merchant may not authenticate or may authenticate in different ways, and the dispute and chargeback frameworks will follow the way of authentication that the merchants will do. What we are advocating, certainly, and what we would recommend is to include biometric authentication in every agentic transaction, so that the consumer data is secure, so that the issuers have authenticated the transaction, and hence the ecosystem can operate the way it does today, which is if the transaction has been fully authenticated, then the liability is shifted, and there's full protection for the merchant and the issuer. We know that cardholder, we work in an ecosystem where there's full liability protection for cardholders, and that would continue to be the case.
Fantastic. That's really good to get that sort of definition, I think, because I think that's what a lot of the questions were of, if it goes rogue and decides to go spending. But obviously, I think we've explained there how that will. So you wouldn't predict there'll be a sudden increase in fraud cases just because they're using the agentic protocol as we move forward, at least in the short term.
In the short term, yes. We have to understand that use cases and experiences are going to evolve. And as I said, that we will constantly evaluate new dispute categories, new use cases. We started the conversation with an autonomous agent. Now, if you think about an autonomous agent and why we didn't actually start with that is because an autonomous agent is making a purchase when you're not around. What this means is that you're actually not having a chance to specifically put a authentication at the time of the purchase, right? So we still have to evolve the journeys as and when we get to autonomous agents. Today, the journey that we've shown, which is an agent-assisted commerce journey, has an active authentication happening from the consumer, and that is quite important to continue to keep the dispute and chargeback framework that exists today in the ecosystem of card payments.
Prakriti, it's been an absolute pleasure to speak with you today. Thank you so much for speaking with me.